Bitcoin and the broader crypto market sink again as investor jitters over Fed policy lingers. It's been a particularly bearish start to the year for Bitcoin and the broader market, as bullish Bitcoin price predictions for 2022 hit the news at the turn of the year, and New Year's Day rally had provided hope. The first January rally, however, was an outlier in what has been an active first week of the year on the news front. A marked increase in regulatory chatter and activity coupled with Fed monetary policy have hit the markets early in the year. On Wednesday, the Fed released its FOMC meeting minutes from the December meeting, catching the markets off guard. Committee members talked of the need to lift rates sooner to curb inflation. There was also the talk of needing to begin reducing the balance sheet. Bitcoin slumped by 2.7% within the first hour of the FOMC meeting minutes being released. On the day, Bitcoin ended the day down by 5%, and things were not much better elsewhere. Ripple's HRP fell by 6%, with Litecoin and Ethereum seeing losses of 7% and 6% respectively on Wednesday. Regulatory activity. Ahead of the FOMC meeting minutes that caused the market stir, regulatory chatter and activity had also tested crypto market support. At the turn of the year, news hit the wires of Indian tax authorities searching 6 exchanges on suspicion of tax evasion. There was also news of a USA Congress subcommittee preparing to hold a hearing on the impact of crypto mining on the environment. All of this, coupled with the talk of a global regulatory framework and the SEC lawsuit against Ripple Lab, delivered early pressure. Bitcoin price action. On Friday, Bitcoin fell by 3.61% to end the day by $41,000. It was 6th consecutive day in the red and left Bitcoin down 10% for the first 7 days of the year. The early pullback has been in stark contrast to the first week of 2021, when Bitcoin has surged by 36%. Though the Friday session was avoiding a return to sub $40,000 levels, finding support at $40,500. Bitcoin ended the day at $41,000 levels. Having seen red for 6 days in a row, avoiding a return to Friday's low $41,000 will be key. For the bulls, a move back though Friday's high 43,000 would be needed to avoid further losses. At the time of writing, Bitcoin was down by 0.6% to $42,000. Elsewhere, Ethereum slid by 6% to lead way down on Friday, bucking the trend at the start of the year. However, has been Chainlink, following a 2% gain on Friday. Chainlink is up 33% year to date. News of the Ethereum, while purchasing 4.6 million worth of Link, has contributed to the upside. Chainlink's decentralized Oracle network continues to draw interest, contributing to this week's gains. At the time of writing, Chainlink was up by 1% to $26. A breakout from Wednesday's high $27 would bring 30 levels into play. Last struck is in mid-November. A pullback to sub 20 levels, however, would test support at December lows, $15. Okay, 1 minute. So Bitcoin fell for a 7th straight day, but is the longest losing streak since 2018, slipping toward the Cape physical threshold of $40,000. As of press time, Bitcoin was changing hands and around $40,800, down 2% over the past 21 hours. Based on CoinDesk pricing, Bitcoin's stretch of losses is now the longest since the downdraft from July 30 to August 4 in 2018. The price has not fallen below $40,000 since September 2021, and it's well off at the all-time high near $69,000 reached in November. Launched in 2009, Bitcoin celebrated its 13 years birthday last week, but there has not been much of a party. Crypto market analysts had warned recently that Bitcoin might be prone to a steeper sell-off, though there were some signs late last week that the market might be stabilizing. January trends to be assessed seasonally weak months for Bitcoin, but this year has been especially harsh, with the largest cryptocurrency down 11% so far in 2022. The market was roiled last week by the release of Federal Reserve minutes, signaling that officials at the US Central Bank were starting to discuss whether to take more aggressive steps to tackle an inflation rate now at its higher in almost 4 decades. Many investors say Bitcoin has benefited in recent years from the Fed's ultra-loose emergency monetary policy since the coronavirus hit the economy, including printing more than $4 trillion to bolster ailing traditional markets. So a reversal of those policies is seen as a fresh headwind for Bitcoin. Okay guys, it's all for today. See you in my next videos. Bye.